Hey everyone, I'm going to go over the KASPA chart. We are currently on the daily, and this has been a strong alt. I would like to dollar cost average more into my spot position. I think I have about a 30% of where I want my allocation to be right now. And the biggest thing that I can see here straight off the bat is the large parallel ascending channel. And we have 2 touches to the upside and 3 to the downside. So we're at a decision-making point. In a shorter time frame trend, we are in a downtrend. And I think the hope here is that we reject off this larger time frame parallel channel and continue upwards. Now, I did have a leverage position from CC's premium trade, bought in at 0.1213 indicated by the yellow dash line, and I basically panic sold at the orange dashed line, which was at 0.11682. For ICP, that was actually ended up being a good sell point when I did sell, because I think it's below the price that I sold at. But for ICP, it is a stronger alt. I think it has stronger fundamentals and tokenomics. And so it is above where I sold it. The next price target is 0.1273, indicated by the blue dash line. And then a more lofty second profit taking is at 0.1333. So as I zoomed into this chart, you can see that the point of control is pretty steady at 0.139679. So that's generally around the center point of mass for this parallel channel. If we break through this channel and we continue with the downtrend, our next area of demand is going to be between the 0.1 area to the 0.096. After that, there's the liquidation price, which is at 0.0921. And there is a slight area, what I would consider an area of demand, although it was not identified by the indicator, which is around 0.088. We are also below the 20, 50, and 100-day moving average, and we are testing the 200-day moving average on the daily chart. So that is something to consider. I think a lot of these alts are at this point where they're at the lowest of their support levels when looking at all indicators. And a lot of where we go next is going to be dependent on what Bitcoin decides to do next, which is going to be determined by the overall macroeconomic situation and any fundamental information that comes to us today. And one of those things that we did see early this morning was the PCE, which was higher than expected, I think by 10 basis points. So not a whole lot. I think it's something that the market had already expected, and we did have a rebound in the traditional market. I'll go ahead and put our Williams fractals in here and see if I can put a fib chart on the lower time frame. Again, this is the Williams fractals indicator. So right around there. And if we zoom in here, we are in basically the retracement zone where it would be good to buy. And there is a point of control. There's actually several points of control here where it makes sense to buy. And this is at the 0.118 price level. And we did come pretty close to testing the golden pocket. Now, this is not an indicator to go ahead and buy, but it is one of several that we can put in our playbook here as we get into the lower time frames. Now, here's an instance of the pattern recognition indicator, or the auto charts, finding a double bottom, and it actually almost reached its price target. So that would have been a good trade. And again, one of many different tools to look at when making a decision on whether to buy or to sell. We're currently just above testing the point of control, so that's a good thing. although we do have this, what could be considered a bear flag. And we're also testing that larger parallel channel. And we tested the descending parallel channel. We got above it. We were trying to test it as support, failed, and we broke down. And now we're testing that ascending parallel channel. And we break down from there. We'll continue down that descending parallel channel, probably down to that first demand area. As we get into the 1 hour, again, now the one great thing about auto charts is that it will identify what it sees consistently as a pattern. So in the higher time frame, I identified this area or this post and flag as a bear flag. However, auto charts, and I think auto charts was right in this case. It is not a bear flag because we actually came down, dipped down, and we formed a starting point for a new pattern, which is the triangle. Now, ironically, this is a 50-50 pattern. We could either go to the upside or the downside, but we could also go to the downside here, which would bring it to about 0.112. But it's not necessarily a bearish pattern. It's a neutral pattern. So it is not the bear flag that we thought it was. It's a triangle, and it is a neutral pattern. I'll go ahead and clear up the auto charts here, and I'm going to clear up, take away the SMAs. We don't need this demand anymore. We don't need the fractals anymore. And we are testing that point of control around here. And I'll bring up the Ichimoku, which I'm sure is going to show that, yep, we're on the bearish side of neutrality here. Lagging span is within price action, and we are testing the cloud as resistance. So we may have a point, this may be a point in the chart where we may begin to reverse. Again, just like with ICP, we're at a boundary of a larger parallel channel. However, we're above it. So I think that bodes well for KASPA over ICP. If I was going to make a trade, I'd probably choose KASPA over ICP at this moment. But we need to have confirmation with the price action getting above and testing the cloud as resistance in order to do a confirmed swing trade where the odds are better in our favor. Looking at the stochastics and oscillators, very similar to ICP. However, we have better momentum to the upside on the 1 hour, and we are above the 50 line with almost all of our oscillators and stochastics. So we have RSI is slightly above 50. We have MFI above 50 at around 62 mark, and a general momentum to the upside, which we did not have with ICP. I believe with ICP, that momentum was to the downside. So that's what we have here. If we want to take a look at the way I do swing trades, I'm going to pull up the EMA, get rid of the DeMark and the Ichimoku. And we are left with our 250 exponential moving average on the hourly chart. Again, like CCS said, price action has been volatile. So we initially had a trend to the downside with the 200-day over the 50-day moving average. We had some bullish momentum. We had a cross, which immediately was dumped on with the news of the GDP. And now we have switched over to a negative or a downtrend with another cross with the 50-day moving below the 200, or the 50 exponential moving average moving below the 200 exponential moving average. Now, pulling up the market cipher, the discount market cipher, if you will. I don't know if I have enough information to really make a trade here, and I don't really have the momentum to. I would prefer that these momentum waves be above this white line with a sell indicator and the the MFI or the money flow index here in the red. But I don't really have that significant of momentum to the downside, which is a good sign for possible reversal. And we do have a trigger wave sort of down here. And if money flow was in the green, you probably could have taken a trade here, and you could have right here if you wanted to be a little bit more risky about it. And that's your green dot. You would take the trade right around the 0.119 mark, but it would have given you negative 0.64%, and that's why we wouldn't have taken the trade here to the upside. And there really wasn't at least in the recent time frame, to take a short. Now, moving back here, we probably could have. So the reason why we wouldn't have taken this trade is because money flow is in the green for a short. So we wouldn't have taken this, but we did get a divergence dot with a sell dot. And if you wanted to be risky about it, you could have taken this trade. And that would have been at this price level here. Your stop loss would be a little tighter than it would have been with ICP, again, because we really don't have all the confirming factors. And we would make this generally a 1 to 1.5 risk to reward ratio. And you could have made a profit of about 2.5%, which is actually pretty good. However, we didn't have all the confirming factors to make a short. I'd rather have had this money flow index to be in the red, and it just be another confirming factor to take a trade that's more on your side. The other thing that we wouldn't have taken this trade for was because the 50-day was actually over the 200-day. So this was actually a surprise due to fundamentals. So right now I don't have a trade for this. We don't have the confirming factors, at least for the way I do a swing trade, and we definitely don't have it for the way Crypto Cache does his trades, which would be a safer bet in my mind. But anyways, that is my analysis of KASPA. If you have any other questions, let me know. Thanks. Bye.